Investing News Network, and here with me today is Luisa Moreno, Managing Director of Tahuti Global. Luisa, thank you so much for joining us today.
Thank you for having me.
All right, so we're here at PDAC, one of the biggest conventions of the resource market this year. How are you finding sentiment from investors towards technology metals so far?
I think it's moderate, it's still there. Not as strong as about 2 years ago, where we saw the prices of stocks, lithium stocks and cobalt pretty high, but they've been coming down, and I think it's a reflection also of the prices for those metals. But at the sessions, so I chair one of the sessions, technology metals, and it was well attended, and there was participation from the investors, so there is definitely interest. Quite a lot of interest for cobalt still, but it's not as strong as a couple months ago.
All right, and what have been some of the trends you've seen in that space so far this year?
Well, I think this year, starting 2019.
Still.
So, like I said, I think folks are still very interested in cobalt. To see, I think investors are trying to understand what's happening to the prices, and whether is a space that's sustainable. So, as far as cobalt, I think it's still quite a lot of interest. Lithium, not as much, but I think investors understand that to make lithium-ion batteries, you do need lithium. So I think they're being a little bit selective and looking at the best projects. And so those that seem to be the stronger projects have had quite a lot of interest. That's what I've seen. But again, cobalt is the one that has shown, I've seen interest from investors relative to lithium or rare earth or other strategic metals.
All right, and what do you think, in your opinion, are some of the challenges or opportunities in the sector right now?
The challenges and opportunities have not changed. So as far as developing projects, what prospectors and the junior mining companies are facing is really unstable prices. So prices have increased significantly, but like I said, they have come down. And that changes the valuations, changes the net present value of their preliminary economic assessments, or their feasibility studies, and it has an impact on their market cap and their ability to raise money and advance the projects. So that is a challenge, but there are many other challenges. I mean, really just understanding the products and the markets, and it's important for strategic metals companies to stay in touch with the market, to stay in touch with end users, and understand how to actually produce the various compounds and materials that they're trying to produce. And they have challenges with that, and those challenges link directly to their ability to develop the project, to take it to the lab and develop their flow sheets, because many of the strategic metals projects are less mining and they're more processing. And so that persists, whether you're talking about cobalt, whether you're talking about lithium or rare earth, the problems are very similar in that respect.
Right, and here at PDAC, you gave a presentation about the disconnect between the demand for strategic materials and the financial markets. What are some of the highlights from that presentation that maybe you can share with our audience today?
It's basically what we've been talking about. So what I tried to do was to bring or emphasize some of the challenges that these companies are facing. So I presented a graph that shows the value, the market size of, for instance, iron ore versus gold versus rare earth. So if you look at iron ore, the market, the volume of sales is more than 2 billion tons per year, and it has an estimated market size of about, say, 130 billion. So, but if you look at rare earths, for instance, it's less than 1 billion, and the tonnage is estimated anywhere between 100 and 130 tons. So you can see the size, volume, and the market size per year for these metals is significantly different. So if somebody wants to develop a rare earth project to sell a rare earth carbonate, which is selling for, say, less than $4,000 per ton, and has a very small market, but if the estimates for capex is 500 million, 600 million, you have to start thinking how much of the market, percentage of the market they will need in order to justify that capex. So that is one of the challenges. And then the other challenges is like going downstream and what we talk about, really to have that technical knowledge, the challenges in terms of metallurgy, understanding the markets. So we have mining companies trying to go downstream, and they will face many challenges, technical challenges they're not used to. And then, like I said, is the market size, that they're selling to. Although prices for lithium are going up and cobalt and so forth, it's still a relatively small volume when you compare to copper or to iron ore, for instance. And that's always going to be, I think, for the most part, a reality. And so those are things that they have to realize. And investors have to be cautious because, to think that a cobalt project, pure play, just producing cobalt, can be viable, it's going to be tough, especially if prices continue to go down. So they have to think about all these things. And, mining companies are facing that, those challenges when they're developing a project of metals that are usually sold or produced as byproducts or co-products, to now think that you can develop as a pure play, it is tough. And then it's all the technical issues as well.
Right, and I wanted to ask you specifically about rare earths. Lithium and cobalt, they make news headlines all the time, at least in the past 2 years they have. But rare earths, what is your outlook for rare earths going forward? Do you expect demand to increase significantly?
I think demand will continue to go up. There is obviously, everybody talks about electric vehicles, and there is potential for more companies to adopt the permanent magnet motors, and those do use neodymium magnets. And but there is increasing demand for technologies, for mobile technologies and so forth. So there will be use and applications for the various rares. But the story has not changed. China still is the largest producer, the largest processor of rare earth. So we have Lynas in Malaysia. They have a percentage of the market, but the technology, the processing technology is mostly still in China. They have the technology to produce metals as well as alloys, and for the West to be able to catch up with China in terms of developing a supply chain, it will be important to have more production outside China. And there are not a lot of companies that are advancing their projects right now.
All right, so on the supply side then, as you mentioned, China is the big leader in this space.
Still is, yes.
Are you seeing any other geographical areas stepping up, maybe in the future, not right now, but going forward?
Geographical areas, not really. I mean, we know in Brazil, CBMM has invested in the separation of rare earth. CBMM, they produce it in niobium, but they also have rare earths in the deposit, and they've invested over $15 million in developing, a demonstration plant and in producing. So I know CBMM is interested. That is out of Brazil, and we might see more production out of there. I'm not sure how significant that will be to the market. But I think Brazil has the potential. In Canada, we don't have a lot of projects. We have Search Minerals. They have shown significant improvements in their processing, and they were able to produce mineral concentrate with a fairly simple metallurgical process. But the challenges are now in order to make it all economic and interesting for investors as well, they have to go downstream. They have to start looking at the separation and the economics of that. But I think they're heading, as far as Canada, I think Search Minerals is heading in the right direction.
All right, and my last question for you today, maybe for investors that are new to the sector, what would be your best piece of advice? What should they be paying attention to when looking at rare earth investments?
Well, the first thing I think is to understand definitely that there is a need for development of rare earth mines and supply chains outside Asia. But looking at the various projects, we still have challenges in terms of processing economically. So many of the projects have relatively low grade and complex mineralogy. So understand whether these companies have been able to properly recover or produce a concentrate, what the economics of that, and what are their plans going forward in separating, looking whether they have found any partners to help them with development of the project and who they're going to sell it to. So it's still complex, but it's needed, and investment support will be important for the development of the sector.
All right, thank you so much for joining us today.
Thank you.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today is Luisa Moreno of Tahuti Global.